Okay, so what have we done so far? We've done all of the first section of the chapter where we learned about debits and credits. We've gotten through about half of the second section where you learn about journalizing posting to a ledger. We've done some exercises. Did we do 6? Okay, perfect. We'll do that together later. What I want to do is show you the entire process via a picture, and I think you might have this. Awesome. This is the entire process. It's in your notes. We journalize transactions first. Remember, they are in chronological order. You could argue it's a little bit messy because when you see the full journal, it's like if you want to know exactly where cash stands, you'd have to find every line with cash on it, add, subtract, and it's just kind of, ugh. Okay? So we do the journalizing first. Remember, there's 5 steps to that. We covered that pretty in depth yesterday. Then I'm going to switch pen colors here. We post. Posting, again, the definition is here, the process of transferring from the journal to the ledger. So line by line, we'd find cash and bring that to the cash journal. We'd find owner's capital, bring that to the owner's I said that wrong, the owner's capital and cash ledger. Last thing we do is we take our account numbers and bring those back to the journal. From a Marsism perspective, the journal is like the confetti look of stuff everywhere. To post, we suck it out of the journal and then go place it in the individual little stories in the ledgers. Correct, yes. Those little numbers are always preset, and I'm going to talk more about those today. Yes. We haven't done a lot with posting yet. I've only showed it to you and talked about it. We'll do that hopefully today as well. I thought it would be a good time to just review what account has debit and credit balances. We talked about that earlier in the week, but I think just listing it somewhere would be good. Again, this is a homemade slide. Debit balance accounts. Now keep in mind, debit means left, credit means right. And as far as the big ALLO-T goes, it's basically this, okay? So on the giant side of the left T are all the assets. They have normal debit balances. The debit is the increase, the credit is the decrease. So all the assets are like that. As we move to the right side of the big T, which right means credit, all the liabilities and 2 of the owner's equity, capital and revenue. They all have normal credit balances, which that simply means like where's the running total, is on the left or the right side. Being that it's credit, it's on the right side, okay? Any credit then is the increase, any debit is the decrease. There's 2 naughty accounts here though. They actually have debit balances. So from OE, you have drawing, you have revenue. I don't want you to think of them as assets. Think of them like assets cousins. Oh, expenses. Thank you. So they have normal debit balance side. Oh. Debit's the increase, credits the decrease. Think of them like assets cousin, the naughty cousin. You could put them over on this credit balance side, but they're reversed because they make the overall owner's equity go down. If the owner takes money out, if the owner has to pay a bill, that's going to make them overall go down. So I had that in there. Maybe my previous classes were confused on that. I think it's a nice checkpoint to just throw it at you guys. Is this in your notes too, maybe? Yeah. This is where I just did one more picture example of this process. Remember, journaling is the chronological. The process of telling the little individual each account stories is the process called posting. Just transferring what it did from the journal over into the bloop, 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 individual little accounts. Just like when we all go to the Pep Fest and Mr. Ekron says, seniors, you go over there. Juniors, you go over there. It's like taking you out of the large group and placing you with what you belong with. I just thought that little picture maybe is the time that you're like, oh my gosh, I get it now. I get it. Here's a little random question for you. Sometimes the PowerPoint will throw this in. Question, if you had to define posting, what's the answer? A, B, C, or D? It is D. Let's talk about why it's not A, B, and C. Normally occurs before journalizing? No. After. And Carrie asked yesterday, should I do it one by one or should I do it all at the end? I referred it to during laundry. Do you do a little bit of laundry every day or do you wait till weekends? Okay. Transfers ledger transaction data to the journal? No. It transfers journal transaction to the ledger. Is an optional step? No. It's a required step. It sucks out of the big thing each individual account stories. You need the ledgers to do the last phase of the chapter, which we'll talk about next week. I felt like this should have almost been at the beginning of this section, talking about chart of accounts and the numbers associated with each account. Okay. Boy, they even throw new ones in here. Weird. So what's a chart of accounts? It's just a listing of every account and its number sequentially so you can make financial statements. Cash, it seems like the numbers are kind of random, doesn't it? Assets are typically 100s. Liabilities are typically 200s. Owner's equity is typically 300s. Revenues are typically 400s. I don't know where they came up with this. I would say expenses are typically 500s. They seem to apply 6 and 7 and 900s to them. Okay, a little bit more about the rhyme or reason with the numbers. Typically, it's a 3-digit. Like you'll notice it's 101, 112, 126. Here's another one, 101, 102, 103, 104, 105. I don't know if this one's in your notes. I think I might have just added this. Tell me, do I have any wiggle room with this numbering system? With 101 and rolling right into 102 and rolling into 103? If I decide later to add like a different type of furniture, or if I add printers, do I have any wiggle room to assign a number? That's typically why you see them go in increments of 10. A better numbering system for this would have been 101, 110, 120, 130, 140. That means you technically have 9 numbers in between in case you add an account. So you'll typically see businesses go in increments of 10. This would be a pretty tough example to add something in if needed. If I go back here, this isn't even by tens, it's kind of random. But if I had to add in equipment right now, equipment's there. Sorry, let's go with a delivery truck. If I have a delivery truck account, could I add that in because I've got wiggle room between the numbers? Yeah. The bigger the business, sometimes you even go into like 4 digits or 5 digits if they have lots of assets or lots of liabilities. I think a better system would have been 101, 110, 120, 130, 140, 150. Notes payable, maybe 201, 202, 210, 220. That way you've got nine numbers to assign if you get a new account that pops up. Okay. You might ask the question, why are they in this order? You'll learn about it later in the chapter, but assets are typically in order of liquidity. The chapter might have talked about it. Do you remember seeing the word liquidity in your notes or reading, or maybe? Liquidity simply means how fast can you turn it into cash? Well, cash is pretty liquid. Cash is already cash. Where do you think AR shows up next? Like if you had to beat the door down of the people that owe you money and get cash, could you? So that's why AR is a fairly liquid asset. Knock, 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 you owe me money. Okay, thank you. Supplies, could you sell your pens and pencils and paper if you had to? Yeah. And then on down. You'd see expenses listed either alphabetically or by their balance. Like sometimes the expenses that have a really high balance will be listed first. They're definitely not alphabetical here, but. So does that kind of clarify where the numbers are coming from? I wish the chapter would have put that sooner in the book, but. Okay, in your notes, you have a bunch of these. I gave you a bunch of these little, they look really confusing, but they're actually not. They're actually a really nice resource. I don't like the first one. Is it talking about the cash increases? Is it the same one? Or do I have it out of order? Okay, this is a really, like, I'd rather talk you through all of this like verbally instead of like explain what each of these mean, but basically it's example transactions. They say the transaction, they kind of explain it to you like what I would explain to you by doing it. They show you how it looks on Allo. They show you how it looks in the journal. And they show you how it looks when you post to the ledger. So it's a nice resource because then if I go to the next one, well, Pioneer pays off office rent in cash. Well, rent expense goes up, cash goes down. How would it look like posted? Pioneer pays $600 for a 1-year insurance policy. Well, prepaid insurance goes up, cash goes down. So it's just lots of example transactions, describing them, how it looks with Allo, what it looks like in the journal, what it looks like in the ledger. I'd rather do problems with you, but I think these are a really nice resource if you get stuck on anything. This is maybe a little overkill. This is maybe a little confusing. This is maybe unnecessary. This and this are great. I just wanted to give you printed versions in case you're exclusively looking in your notes to study for tests. So it just goes through all of them. There's a lot of them. So I think it's a good time to get these 2 brief exercises done. Cool? So I'm not trying to bypass all those transactions. It's just like they're really detailed and there's not much that I could cover that's not already there. Do you have brief exercise 2.6 in your workbook? Yay! Do you have brief exercise 2.8? Good. Oh, golly. The power surge made those slides corrupt. Okay, I'm going to stop the recording.